Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily charts and instead concentrate on the longer term view using my weekly, monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. So let me introduce today's longer term chart. Today I'll be looking longer term at New York coffee. The key pattern here is the 2021 to 2022 diamond top pattern. It is a little lopsided, but it is there nevertheless. There is also another longer term pattern dating from as far back as 2016. I'll quote my original commentary from the start of 2019, which I've repeated here ever since. Finally, there is a possibility, just a possibility, that the action since the drop back in 2016 could be a type of bump and run reversal pattern. It looks very much as if it could be, but it is early, so watch carefully. End of quote. I added the following additional comments in 2021, and I quote, 2020 has done everything it could to stymie that bump and run reversal pattern. And for the most part, it has been effective. However, it has not killed off the idea. I still think we might just have such a pattern. We'll have to wait and see. End of quote. Well, in 2021, this bump and run reversal pattern came into its own with a brilliant move higher, reaching both the primary and secondary targets for the pattern, and finishing off handsomely with a diamond top pattern in late 2021 and into 2022. I said last year, and I quote, realistically, the next topside area of significant resistance is the congestion between 265.5 and 267.75, and then the August to September 2011 high area between 287.15 and 290.85. End of quote. However, prices stalled before getting up to test the resistance congestion, turning instead lower. In doing so, the market broke down through the lower trend line of the diamond pattern, fulfilling both the primary and secondary targets on the way down, and also at the same time breaking through the significant 50% Fibonacci line of the 2011 to 2019 move at 198.30. Also the nearby congestion between 195.90 and 197 even, and most recently breaking below the 50% Fibonacci line of the 2019 to 2022 move at 174.05, as well as the 3-year moving average, currently 168.5. For the moment, prices have slowed at the 38.2% Fibonacci line of the 2019 to 2022 move at 153.65. But I'm not too sure how confident that basing action is. I should point out a significant feature of a bump and run reversal bottoms. In the follow through to a bump and run reversal bottom, it is not unusual to see such a fall from a great high, a significant throwback as it is known as, such that if prices do hold in this 38.2% Fibonacci or nearby, ideally with a spiked bottom pattern of some form, then the bullish incentive will again emerge, only stronger. So it's important to watch carefully at these levels for the next few months, because if the market holds, then there is a significant likelihood of prices exceeding 2022's high. If not, then the congestion below, starting at 130 even, down to just under 100 even, will beckon. Thank you for listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final bit.